So what's up in the world of real estate? Well, let's find out. I'm Justin Miller, principal and co-founder at the Chong Miller Group. At the Chong Miller Group, we help people build wealth through real estate. We help people buy and sell properties, whether those are primary residences or second homes or investment properties, single family residential condos or townhomes here in the Las Vegas area. Please feel free to reach out if you got any questions about real estate. We might be able to help you really well. Okay, so this is the April 24th real estate market update for Las Vegas. In this video, we're going to look at the resale single family housing market in Las Vegas for the month of March of 2024. So we always collect our data on the 7th of the month, looking at the month prior. That allows us to see everything that happened within March with the most stable data that's available. Now, we also make comparisons then to the prior month. So we're looking at what happened during the entirety of the month of March by looking at end of February as well as end of March data. And we make an annual comparison in order to try to deal with seasonal influences. So we're looking at the end of March 2023 compared to the end of March 2024. All right, with that out of the way, let's go ahead and look into the data. Again, this is resale only, single family housing for the Las Vegas metropolitan statistical area for the April 2024 market update. All right, first thing, pricing. Median price went up. It actually went up kind of substantially. We have hit a median price at the end of March of 2024 of $460,000. Now, this is up, it's up 1.5% from the $453,000 or $7,000 higher than we had hit in at the end of February of 2023. I'll also note that in this past cycle, we had hit a high in May of 2022 of $480,000. We then dropped during the second half of 2022 all the way down to $415, and that became the floor to put in for our new pricing cycle. We at $460 have recovered $45,000 of the total $65,000 price drop that we saw in 2022. So we've recovered approximately 2/3 of the entire drawdown that we saw. So we are well on our way to moving back above the $480,000 median price that we saw in May of 2022. It's still a little early in 2024 to know for sure, but I suspect we're actually going to achieve that 480 price point again this year. And we may actually exceed it a little bit. Okay, now we are up a very strong 9.5% from the 420 that we had experienced in March of 2023. So again, I'll point to that drawdown. May 2022 peak at 480,000. We drew down to 415 in December of 2022. We bounced slightly higher in January of 2023, back to 415 in February of 2023, and then up to 420 in March of 2023. And we've not looked back. We've been going approximately straight up since that time, so over the past year. And we've increased in our median sale price here in the Las Vegas Valley $60,000 or 9.5% during the course of that year. What's an average year look like? It looks like something between 5 and 7% price appreciation in Las Vegas single family housing market. We've exceeded that. We've been exceeding that for the past several months. We're up 9.5% year over year. Okay, very strong 12-month gain. Now, that's taking place against an interesting backdrop, right? Most people, between 70 and 75% of the market every year, every month, is comprised of people who are buying properties with mortgages. Sometimes you read in the press the number of people who are making all cash transactions is increasing. Yes, sometimes it increases from 25% to 25.3%, 26%. Approximately 70 to 75% of the market every month is made up of buyers who are actually taking out mortgages. So what's going on with mortgage pricing? Mortgage interest rates have been hovering in the 7% range throughout all of 2024 so far. And so we ended actually March 2024 with interest rates coming down a little bit. From the prior month, they had come down to 6.91% average 30-year fixed rate loan, according to the Mortgage Bankers Association. That was down from 6.96% the week prior, so we've been just barely below 7% realistically through all of March. 7%'s a fairly high interest rate. A lot of people have been thinking interest rates are going to be coming down this year, including myself, and they will be, but that's been delayed. So we are below that 7% line, which is definitely really good, but just barely. So in other words, these price increases are taking place in the face of higher or high interest rates. So that's really consequential. We've got prices going up, and the carry cost on those mortgages is definitely higher because interest rates have not been coming down. Let me just give you one more interest piece of information here, and that is what's been going on with the 30-year Treasury. If we look at the 30-year Treasury or the 10-year Treasury, we see a pattern that impacts the mortgage interest rate. So as Treasury prices go down, meaning interest rates on Treasuries go higher, we see a gap of just under 2% between those 10-year Treasuries and what's taking place with 30-year mortgage rates. So as Treasury rates, yields, go higher, we see mortgage rates also go higher. Well, over the past 2 months, we've actually been seeing Treasury rates going higher. It's because there's been a lot of good economic data, and so a number of people become very concerned, bond traders have become very concerned that the Federal Reserve is not going to be cutting their policy rate, the federal funds rate, until later in this year, if at all during 2024. Mortgage interest rates have been elevated relative to their typical spread above Treasuries. So we've still been able to close that gap a little by pulling mortgage interest rates a little bit lower. But realistically right now, mortgage interest rates really have a floor under them of about 6.8%. It's going to be hard to see interest rates coming below 6.8% for conventional loans. We might be a little bit lower, 6.7% on VA loans, because the VA secondary market has been less impacted by some of the volatility. But that means interest rates are going to be sitting here in sort of that 6.75 to 7% range for the next couple of months. Now, of course, if you buy a property, you can always refinance it when rates do come down. That's good news. But your monthly payments getting into property right now, definitely a bit higher. Now, the one other thing on pricing I want to talk about, and that is I look at a second version of pricing to see sort of implications for the internal issues with regard to the real estate market. And we do that by looking at the price per foot. While it's not a good indicator of what an individual property should be priced at, it is, again, data across the entire spectrum of sales that took place. And so we get an average or a median, and it's informative to us. So the median price per foot went up to $251, went up by 0.8% from $249 at the end of February. It's up 7.3% from the March 2023 number, which was $234 per foot. So that's interesting. It means that prices on a per foot basis are also going up. They're going up slightly slower, up 0.8% instead of up 1.5% on the median sale price month over month, or up 7.3% instead of 9.5% year over year on median sale price. So that suggests to us actually that the cash portion of the market, the higher end portion of the market is actually suffering a little bit more from these high interest rates than the lower half of the market, where we might expect more interest rate sensitivity. Why would that be taking place? Well, a significant portion of the market right now is comprised of those people who need to buy and those people who need to sell, as opposed to those people who simply want to buy or those people who simply want to sell. So if you have need, such as you've got a new job in Las Vegas, you need to be here and you need housing, that is inducing additional sales in sort of the lower half of the market, regardless of the high interest rates. Whereas at the upper end of the market, there's a little bit more leeway in terms of those need to buyers and sellers, and we see a greater proportion of want to buyers and sellers. And so it means that we actually have a narrower set of required transactions and therefore a narrower set of transactions taking place in the upper end of the market. So kind of interesting, a little bit counterintuitive to what you might expect with the interest rates, where you might expect the upper end of the market is less interest rate sensitive. All right, so that's what's going on with pricing. But what about our demand measures? So demand, we're using proxies for that. That is number of sold properties and number of pending contracts. We use those because it's the only measure we can come up with for demand. If you're looking at new construction, you might have some additional measures you could look at, such as the number of potential buyers who are walking into the sales office in a community. But for the resale market, we don't have that measure. So we look at completed sales and we look at pending contracts, because those do not take place without a buyer, and consequently those are solid demand measures. So what happened with sales in the month of March? 1,798 closed sales. Remember, they took place at the median sale price of $460,000. So regardless of what the price was on an individual unit, collectively across those almost 1,800 sales, the median price was $460,000. Those 1,798 sales, that's up 8.2% from the 1,662 sales that took place during February of 2023. So that's a nice healthy increase in the number of closed transactions. Now we do expect to see closed transactions increasing throughout the latter half of the winter and through spring. So this is sort of seasonally normal. Now, compared to last year, we're actually down on closed transactions. In March of 2023, we had 2,152. So 154 more sales took place last March than in March of 2024. We're down 16.4%. So transaction volume remains very low, but we saw last year, actually, 2023, the overall lowest transaction volume that we've seen in the Las Vegas Valley in over a dozen years. And so this is good news. We're not going down, we're actually going up on sales, but we're still at very low volume. Remember, most of those want to buyers, I want to buy a property, or want to sellers, are not really active in the market right now because of the high interest rates. We've got the need to. I need a place. I need to move into a place. Buyers, I need to sell a place. Sellers who are transacting in the market right now. And so it's kind of interesting. We're actually seeing increased demand among those who need to be buying houses. That's a good sign. That says there's a lot of strength in the economy here. We're drawing in job seekers coming from other places. We're drawing in retirees coming from other places. So the Las Vegas economy is growing. That's what that means, is that we've got increased sales even at high interest rates and at low volume. So one other way we look at demand is pending contracts. That's where a buyer finds a property, they really like it, they put in an offer, buyer and seller negotiate that and get into contract. And we're waiting to go through the escrow process to close on that transaction. Pendings, 2,257. This is up a very strong 37.3% from the 1,863 that we saw go into contract in February. Now, this is actually more than seasonal normal gains. We're actually 11.0% above the 2,033 pendings that were written in March of 2023. So this is really encouraging. And I'll point out to you, the pending number is 259 higher than the closed number in March. And what that suggests to us is that April closed sales will actually be going higher because we've got more pending contracts. So that's really encouraging looking forward. And that's why I say some of the statistics actually give us really good insight into what will be happening into the future, even though they're backward-looking contracts that were written in March. So we saw sales go up, we saw pendings go up very substantially. Those are fantastic indicators of demand, even at these high interest rates and even at increasing prices. And by the way, when you've got increasing prices and increasing sales, that's a really strong indicator of the strength of demand that's out there. We've got people who want to be buying who just simply aren't able to buy right now. We've got people who need to buy, they are buying, but this is an indicator that, again, with pending, confirming this, pendings being much higher than sales, that we've got real strength in the demand side of the market in single family resales here in the Las Vegas Valley. So that gives us pricing knowledge and it gives us demand knowledge. One other thing I'll say, and then I want to switch to looking at supply issues. With regard to foreclosures, and again, there's a whole lot of people out there talking on YouTube, everything's collapsing, you're going to be foreclosed on, and you're going to be able to get all these amazing deals. Foreclosures did go up last month in March 2024 relative to February. They went up from 12 to 13. And in January, you'll remember we were at 16. So we were at 16 and then 12 and now 13. We don't see a trend in the actual data around foreclosures other than foreclosure activity is incredibly low. Foreclosures are not taking place in the residential market here in the Las Vegas Valley. And realistically, they're not taking place anywhere around the country with a couple of minor exceptions in residential real estate. So if you've been paying attention to those out there preaching doom and gloom who are telling you you'll be able to wait and get amazing deals in the future because of extreme growth in the foreclosure market, the data are just painting a completely different picture. Foreclosures remain incredibly low. Prices are going higher, even in the face of high interest rates. People who are following the advice of the doomsayers to stay out of this market, you're really making a mistake. You're hurting yourself because as prices go higher, you're paying more. You're paying more not just on the actual price and on the down payment, you're paying more on your monthly. And as interest rates do start to come down, we're going to see a lot more transactions because more people will be able to afford to make the purchases that they want to in this marketplace, which is going to cause prices to go even higher. So be careful of the information that you're listening to out there on the internet. There are a lot of people, one supposed real estate agent here in Las Vegas, who actually made the comment, quote, "If you're hoping for a crash like I am," well, it's ridiculous. A real estate agent hoping for a crash and trying to convince his followers that there's a crash coming, it's just not correct. It's bad information. And listening to that bad information, I don't know, maybe it feels soothing to you for some reason, but it's a total waste of time. It's misleading. You're hurting yourself when you follow people like that. And by the way, it's not just that I'm Pollyannish and I think the market's always going to go up. Go back and look at my annual forecasts for 2020, for 2021, for 2022, for 2023. My forecasts tend to be very accurate because I have a good understanding of what's actually taking place in the market in terms of demand and in terms of supply. So, and if you find these videos to be insightful and useful, please, if you've not already, subscribe, smash the like button, and share these videos with your neighbors, your friends, your colleagues, your coworkers, anyone you think might benefit by getting a real data view of the market and may benefit from the insights that I share in these videos. Okay, so let's move on to supply now. We've looked at demand strong. We've looked at pricing, even in the face of higher interest rates, pricing very strong, right? Closed sales prices, not list prices. For sale, problem. This is a measure of supply. 3,460 single-family homes for sale at the end of March 2024. This is down. It's down 9.3% from the 3,815 that were for sale at the end of February. This is completely counter-cyclical. If we look at seasonal patterns, we see supply going up throughout the latter part of the winter. Actually, we see the lowest supply in the market every December is a seasonal pattern. And we see supply growing throughout the winter and throughout the spring. We've come down on supply every month so far this year, and we're down another 9.3% in March of 2024 relative to the prior month. We're down 37.7% from the 5,555 single-family resale homes in the marketplace at the end of March 2023. So supply is just being eaten with sales, with withdrawals, with people converting their properties into rentals. Instead of selling whatever it is for the reason, we see inventory in the marketplace coming down. We're actually under 2 months worth of inventory right now. On a sales basis, we're at 1.5 months worth of inventory on a pending contracts basis. Right? Normal market, 6 months approximately in Las Vegas, between 5 and 6 months worth of inventory sitting in the market. That's the amount of time it would take to churn through everything that's for sale if nothing new came into the market to be sold. It would normally take 5 to 6 months. Here in the Las Vegas Valley, we're sitting under 2 months. On a sold basis, we're sitting under 1.5 months on a pending contracts basis. This is really, really low inventory. In fact, if we look over the past 18 months, we've been depleting the inventory for 15 of those 18 months. If we look back to 2007, August of 2007, we have had lower inventory in the market only 2 months. And by the way, one of those months, we were 5 units under what we are right now. And another one of those months, we were 20 units under what we are right now. In other words, we've got 3,460 units for sale at the end of March. If we were at 3,440, 3,439, right? If we were 21 units lower, we would literally have the lowest inventory that we've seen in Las Vegas since August 2007, in the middle of the great financial crisis. Stunningly low inventory, right? And if you think about that on a per capita basis, a population adjusted basis, in 2007, the Las Vegas Valley had about 500,000 fewer people than we have right now. So we've increased the population of the valley by 25%, and we're sitting at the same number of properties for sale. Just stunningly low inventory. So this is a problem, right? And those buyers who are looking, they're not finding inventory to buy. They're still getting into contract and they're buying things. We've got sales going up even when inventory is this low. Well, no wonder prices are going higher. One other way to look at supply, and that is newly listed resale units. So not last month, but this month, a seller decides, a potential seller decides, you know what, I want to go into the market, I want to sell my house, or I need to sell my house. I'm being transferred to some other place, or I've had a substantial change in family circumstances, and I need to get a bigger or a smaller property. or I'm retiring and I'm needing to move to a different kind of place than what I've been living in, right? So we've got new listings come into the market every month. In March, we saw 2,575 newly listed resale single family homes come into the Las Vegas Valley. It's up 6.8% from the 2,411 that came into the market in February. But this number should be going up very substantially month on month throughout the entire winter. Again, smallest inventory happens in December of every year. It's a seasonal pattern, right? There could be exceptions. The number of exceptions to that, 2 years going all the way back to the great financial crisis. And the exceptions are very, very minor in scope. So December is always the lowest inventory, lowest new into market. Come January, people start putting properties into market, and that starts to help to build inventory. And that's why we end up with what's traditionally called a spring selling season. We've got lots of inventory. Well, we're in the spring, right? Spring started in March, literally. The calendar spring started in March. And we've got just tiny increase in new listings coming into this market. We're up 4.6% from the newly listed that we saw last year when we had record low inventory on a 12-month rolling basis here in the Las Vegas Valley. We're up from 2,461. So very low new into market, very low inventory. So that's what's going on in the Las Vegas market. Increasing prices because we've got good demand, even with high interest rates, and in the face of very low inventory. That's the description of the market. That's the reality of what's taking place in this market. Now, there's one other statistic I've been pointing out over the past 4 years now I want to comment on because it remains really, really bad. In March 2024, properties that were in contract, 775 of them dropped out of contract. Those properties went back onto the market. That's 30.1% of all contracts failed and displayed a back on market. The number is actually worse than that because if a seller decides not to go back onto the market, the escrow collapses and the seller decides to rent their property or to not sell their property, those don't show as back on market. So this number is actually worse than the way I report it. I'm reporting it in a conservative manner. We're losing 30.1%. We lost 30.1% of pending contracts during the course of March. This number has been hovering between about 27 and 33%, frankly, since the middle of 2020. Started becoming really pronounced in October of 2020. These are really significant numbers. Make sure you're talking to me or whomever your real estate agent is, if you're thinking of buying or you're thinking of selling, about what's causing these really high back on market numbers. Because between more than a quarter of all contracts, approaching a third of all contracts are failing. If you're a buyer and you go through the process, you've had your inspection you paid for, you've paid for an appraisal, you fall out of contract, you're literally out of dollars. And in addition to being wasted time on the purchase you want to make and losing out on being able to buy the home for whatever the reason is that you wanted to buy, that you had thought sufficiently enough about that you went into contract on it. If you're a seller, your property was pulled off the market the entire time you were in contract, you've lost that time in the market. You may have to give back the earnest money deposit, depending on the reason for the failure. Maybe you get to keep the earnest money deposit, so you keep a few $1,000s to pay for your time off market. The reality is nobody's benefiting from these failed sales. You want to protect yourself, whether you're a buyer or a seller. Make sure you're talking to your agent, me, or whomever your agent is, about what's going on, why it's going on, and how to protect yourself prospectively, how to try to pre-negotiate around the issues that are causing all these contract failures. They can be negotiated around frequently, and we've had success doing that. And it's really important to try to maintain the contract and get through it and actually end up with happy buyer, happy seller, a sold home, a purchased home, somebody moves into the house and gets to start enjoying it, building their own memories in it. All right, so that's it for the April 2024 market update for Las Vegas for single family resale homes. I am Justin Miller with the Chong Miller Group. Again, please, if you have comments, share the comments. If you have questions, please reach out. I'd be happy to help you. We help people build wealth through real estate here in the Las Vegas metropolitan area. I'll see you in the next video. Thank you.